right, everyone, take a look at the market right now. You can see we're climbing back here. We were down more, now just down 98 points, but still a bit of a sell-off here. Investors are getting a little nervous about any kind of delay we might see in tax reform. Don't forget Steve Mnuchin, he'd been promising August, but you just heard Byron New York say, yeah, that's not going to happen. And also Mnuchin communicating via the Financial Times, it's just not going to happen as well. You got bank stocks, meanwhile, weighing on the market. Disappointing earnings report out of Goldman. That's contributing to things. Bank of America, the only one really seeing any kind of upside, and that's barely any upside right now. For more on where this market's heading and what happens if we don't actually get tax reform soon, we have Bullseye Brief founder and author Adam Johnson and our very own Lori Rothman from the New York Stock Exchange. Good to see both you guys. Okay, Lori. People wanted it. They thought they were getting it. You know, Steve Mnuchin told our very own Neil Cavuto it's going to be signed, sealed, and delivered by August. Now they're walking all that back. I'd still say, though, the market's taken it a little bit in stride. What's your reaction?
So, Trish, you're hitting the nail on the head when it comes to the broad problem here. We have seen a total reversal, right? We saw banks taking off right after the election, along with small cap stocks and infrastructure stocks, on the expectation that Trump's policies would engender faster economic growth. Now, that still might happen, of course, but what we're seeing, getting back to this reversal now, is strength in technologies, big cap names that have a tendency and a strong track record in growing revenue, even in times of an economic slowdown. So that's why we see technology being, with all the losses today, kind of one of the stronger sectors. So you have that, and then you've got other geopolitical risks out there, of course, as well.
Sure.
Syria, North Korea, Theresa May calling for the general election, and that's not helping the bulls much either.
You know, I get it. I mean, yeah, the other geopolitical risks out there, I'd say so. I mean, Adam, I feel like, you know, you got to give the market credit for taking some of this in stride, because it's North Korea, it's Syria, it's Russia, it's China, it's tax policy. I mean, you name it, and yet we're still looking at a market that hasn't stumbled that much.
Well, it's real simple. The two E's, right? Earnings and employment. We have earnings growth, Trish, of about 7 to 8% right now. This is the second consecutive quarter that U.S. corporations are showing very strong earnings growth. And by the way, it's also on the top line. It's sales growth of about 7 or 8%. You have full employment, right, down at about 4.5%. So people are working. This is a very strong fundamental story. The tax thing, yeah. Guess what? We saw that one coming. I mean, if they couldn't get health care done, there was no way they were going to be able to get tax reform done. But even even Ronald Reagan needed 2 years to get tax reform done. So you know what? The market is taking this in stride. You're absolutely right.
So you still think it happens? And
it'll happen. It's just a question of degree. But, you know, Washington is not Wall Street. I mean, think of all the different groups that want to try to get their hand in the pot and want to try to create different incentives. And, you know, look at the way the market has responded. We just saw Bank of America up 2 cents today. Bank of America put up some very good earnings, and it's, by the way, hiring for the first time since 2010. Great American story. By contrast, look at U.S. Steel, which is one of the shorts that I've had my Bullseye Brief readers make some money on. We shorted that thing up at $40. Today it's 28 because it looked like infrastructure was going to slow down, and the same deal with tax reform. So the market has already decided that some of this stuff that was supposed to happen, that we thought was going to happen, got all excited about in November, is just taking longer than we thought.
All right, here's the president. He's just disembarking there from Air Force One in Milwaukee, Wisconsin. He is introducing his Buy American, High American policy, an executive order that will affect H-1B visas. He wants to revamp how the H-1B visa program is actually put in place. His criticism being that too often companies, via the lottery system, take in workers from overseas at the expense of American workers, and these are not workers that are truly deserving of the jobs. You know, H-1B visas, it's something that the tech community relies heavily on, and yet that said, Adam Johnson, I mean, it's still not a ton of visas we give out. I mean, roughly 60,000 or so that we're giving out. Yeah,
60,000, and at various times they've upped it to 85,000, and there was even one quarter when they put in a temporary measure to get it up to 120,000. They basically doubled it. This is about bringing...
Oh, my goodness, look at the baby.
Yeah.
Look at the baby.
Well, you know,
that is just precious. Oh, and he even got a kiss.
Well, he is a president and a media personality. He understands these things, and there's nothing wrong with, you know, kissing babies and having the military stand close by. I mean, this is quite a story. And by the way, Trish, we are witnessing a man on a very steep learning curve who is figuring it out. He pivoted on China. He said they're not a manipulator, realized we need China, especially with what's happening in North Korea. As Jamie Dimon said, we're learning how the sausage gets made. You know, we're watching Donald Trump in his first 100 days kind of navigate some very new waters.
Right, and it ain't always pretty.
No, it's not.
But, you know, you got to feel your way, and you got to do what's right for the country.
Yes.
You got to do what's right for our economy. You got to do what's right for our security.